Hello friends, this video is about the basics of accounting. What is accounting, the types of accounting, its functions, and the basic terms which are used in accounting. This video is going to be very helpful for those students who are freshers and also for the engineering students who don't know the basics of accounting. So let's get started. First of all, what is the meaning of accounting? But before knowing the meaning of accounting, we should know what is business, because business performs accounting, right? So what is business? See, business is any activity which is done for profit making. If there is not the motive of profit making, then it is not a business. So if an activity is being done for earning profit, then it is business, right? So there are various kinds of business that are being performed in day-to-day life. For example, there is a trading business, there is a manufacturing business, there is a service business, right? So all these businesses, they have number of transactions involved, and these transactions are required to be informed to their users. So accounting basically helps, it acts as a language of the business, and it provides all the information related to the business to its specified users. Right? So accounting is an information and measurement system that identifies, records, analyzes, and communicates the information of a business to its users. There are a number of users of an accounting information. There are creditors, there are suppliers, there are customers, there is government. So there are investors also, right? So these users are interested in knowing that whether the business in which they have invested their interest is earning profit or not, it is in good financial position or not, right? So every investor, every user, every supplier, customer, they want the information from the business. So accounting acts as the language of the business, and it provides the required information to the users in the identified manner so that the users can take their required decisions. For example, the investors who have invested their money in the business will be interested in knowing that whether that business is earning profit or not, whether they will be getting some return from that business or not, right? So for those investors, they want some information. So that information related to the profitability, related to the financial position will be provided by what? It will be provided by accounting. So that is why we say that accounting is the language of business, and it provides the information to the users. So it will be an information and measurement system which will be firstly identifying the transactions of the business, what kind of transactions are taking place in the business. All the transactions will not be of interest to the users, because the users will be interested in only the financial information, right? So accounting will firstly identify the financial information, the monetary transactions. Then it will record those financial transactions and then analyze and further communicate that information to the users so that the users can take their so they can make their decisions. The investors can decide that whether to invest money or not. If they have invested money in a particular year, then after looking at the accounting information, they will be able to make decision that whether they should invest the money in the next year or not. They should withdraw their money or they should further invest their money, right? So accounting will act as the language of the business. It will provide all the information required by the users, and that information in the particular manner which is required by the user. See, every user will not be having the accounting knowledge, right? So the accounting will provide the information, accounting will provide the detailed information of the business to the users in a particular manner, and that manner will be in the form of its financial books. It will be in the form of the profit and loss account. It will be in the form of the financial statements, that is balance sheet and profit and loss account of the organization, right? So we have now, till now we have understood that accounting will firstly identify the monetary transaction. See, if an organization says that yes, I have a building, I have furniture, I have 10 chairs, I have 20 chairs, I have some stationery with me, then this information will be of no use to the users, right? They will be interested in that information if it will be in the monetary terms. If this organization says that yes, I have a property or a business worth rupees 10 lakhs, if the organization says that yes, I have furniture worth rupees 2 lakhs, right, then that information will be of use to the users if that is in the monetary terms. So first of all, the information should be in the form of money, right? It should be in the monetary terms. After that, when the information has been identified, the monetary information has been identified by the accountant, then the accountant will record that monetary information in a book, journal, right? So journal is mainly used for recording the monetary transactions. All the transactions will be distributed everywhere, so they need to be heading towards a particular place. That particular place where all the monetary transactions are recorded in a particular manner is known as journal. So after identifying the monetary transactions, these transactions are recorded in journal, right? So there will be number of transactions recorded up in the journal. So all these need to be classified into a particular heading. See, suppose that we are making transactions about customers, that will also be recorded in the journal. Transactions about investors, transactions about the investors, government, cash transaction, your purchase and sale transactions, everything will be recorded in this journal. All the monetary transactions will be recorded in the journal. So say for example, there is a particular customer, say Ram, from which the organization is purchasing. So he is supplier for the firm. So that Ram will be recorded up, I think 10 number of times or 11 or maybe many number of times in the journal, because he will be supplying the goods many number of times. So there will be a particular head named as Ram account. There will be a particular head for each and every name that is being recorded up in journal. For every supplier, for every investor, for every customer, for every transaction that is being recorded up in a journal, it will be further headed up, it will be further recorded up in a particular account. So there will be a separate account for Ram, there will be a separate account for say another person Sham, so there will be a separate account for another person X or Y or Z. So all those recorded transactions, they will find a particular head in the form of account in the ledger. So that is known as ledger, where we will be preparing separate accounts for each and every identity person involved in the journal transactions, right? So ledger, it acts as a particular head where all the transactions related to a particular person or a particular entity are headed at a particular place, right? So for example, there will be a separate heading for plant and machinery, there will be a separate heading for land and building, there will be a separate heading for furniture, stationery, for purchase, for sales. So all the transactions related to purchase will be recorded in that particular purchase heading, purchase account. All the transactions related to the sales will be entered in the sales heading of sales account. All the transactions related to plant and machinery will be entered in the plant and machinery account, and so on, right? So firstly, after identifying the monetary transactions, all the monetary transactions will find a place in journal, and then a particular heading for each and every entity person will be recorded in the journal. So in the ledger. So ledger act as a particular head for each and every transaction which has been recorded in the journal, right? So after preparing journal, after preparing ledger, there is time for summarizing, right? So all the ledger accounts which I have told you, for example, sales, purchase, plant and machinery, land and building, and so on, these need to be summarized, right? A summary of all the transactions of all these ledger accounts is done in trial balance, right? So if we prepared plant and machinery account here in the ledger, so there will be a particular summary, there will be a particular balance of plant and machinery, right? So that particular balance at the end of the year will be recorded up in trial balance. Similarly, like we prepared land and building account in the ledger, so the closing balance of the land and building will be headed towards the trial balance, right? Only the closing balances, only the summaries of all the ledger accounts are prepared in the trial balance, right? So this was the next step, that is summarizing. So after recording transactions in the ledger, after making a classification of accounts in the ledger, the closing balances of all the accounts is entered in the trial balance, right? So trial balance will be, that is why it is said that while summarizing, we say that we prepare trial balance, and trial balance is a summary of all the accounts which has been prepared in the ledger, right? So closing balances of all the accounts in the ledger will be entered up in the trial balance, right? So in order to provide the summary of the all the accounts to the users, trial balance is prepared, and for the financial statements of the organization are also prepared. So when we talk about the financial statement, this means that we are talking about the profit and loss account and the balance sheet, right? So after preparing the trial balance, the profit and loss account and balance sheet, which we say are the financial statements of the organization, are prepared. So profit and loss account will help in understanding the profitability position of the organization, right? The net profit and net loss. And the balance sheet tells about the financial position of the business, financial position of the organization. It is financially stable or not. It is a statement, balance sheet tells about the position of the assets and liabilities of the organization, the financial position of the organization. And the profit and loss account, as the name itself suggests, it tells you about the profitability position, that whether a firm is in going up in profits or in the losses, right? So after having a summary of all the accounts, after preparing the financial statements, the customers, the investors and all the users will be able to make the interpretation about the running position of the organization. They will be able to know that yes, the firm is in profit or loss, what is the financial position of the business, right? So the decision makers, the parties, they can make interpretation and they can further make their decision making, that whether to keep their interest vested up in the organization or to take out their money invested, right? So this was the complete process of accounting, that is firstly identifying the transactions only of the financial nature, right? Then these financial transactions are recorded up in journal. Further, these are classified, they found a particular heading in ledger. Then all the ledger accounts find a closing balance, find a summary of their accounts in trial balance, from which the financial statements, profit and loss account and balance sheet are prepared. This profit and loss account and balance sheet, the financial statements of the organization, helps the decision makers, help the users in making the interpretation, about the profitability, about the financial statements of the organization. So that particular information is when communicated to the users, they are able to make their decisions. They can go ahead with the decision making, right? So sometimes there is a confusion that bookkeeping and accounting are same. No, bookkeeping and accounting are not same, because bookkeeping is limited only to the identification of the monetary transactions, recording of the transactions in the journal, and then classifying in the ledger, right? Bookkeeping is limited only till here, while the accounting is involved further ahead with the summarizing, interpretation, communication, and helping up the users in the decision making. So there is a huge difference between bookkeeping and accounting. Don't mix these two terms, right? Bookkeeping is the process of bookkeeping is still here only, classification in the ledger, and the accounting, it is a complete function of the accounting to help the decision makers in the decision making, right? So that will be done only when accounting performs a function of summarizing, interpretation, communication of the information, so that the investors, so that the parties can make their decision, right? So this was all about accounting. What is accounting, and what is a process of accounting, and there is a difference between bookkeeping and accounting. I hope this is all clear to you. Let's move ahead with the branches of accounting, right? What are the types of accounting, or you can say what are the branches of accounting, right? See, all the financial transactions, as I told you, all the money centric business transactions that are managed by accounting, it is done with the help of its certain branches. So there are a number of branches of accounting. First of all, it is financial accounting, cost accounting, management accounting, and social accounting, right? So let's take them one by one. The first one is financial accounting. Financial accounting is involved in the preparation of profit and loss account and the balance sheet, right? So if we say that the decision makers are interested in making the decisions about the profitability, they are interested in having the information about the profitability and the financial position of the organization, then financial accounting will come into picture, because it is involved in the preparation of the profit and loss account and balance sheet. Financial accounting will be then providing up the information to the users so that they can take their decisions on the basis of the profitability and financial position of the business. If the decision makers, if the users are interested in the information related to the cost of manufacturing or the per unit cost of the product, right? The product that is being manufactured by the company. So what is the total cost of that product? What is the per unit cost of that product? Then that type of information is provided by the cost accounting and not the financial accounting, right? Because the financial accounting will provide the information about the profit and loss account and the profitability and the financial position. So if the information is required related to the costing of the product, related to the per unit cost, or related to the total cost of the product that is being manufactured by the organization, there can be n number of products. So there will be the costing and the per unit costing related to each and every product, right? So that kind of information is provided by the cost accounting. Fine. Okay. If the information is required by the management, because management itself has to take a number of decisions related to the planning, related to the controlling, right? So when the information is required by the management, then that kind of information is provided to the management by management accounting, because it is the job of the management accounting to help, to assist the management in planning and controlling the operations. And that is done by various instruments, and mainly these are the ratio analysis and budgetary control. We all know that budgets are prepared by the companies. They will be having production budget. They will be having a target that for example 1 lakh units are required to be prepared in a particular year, right? Or there will be a production cost budget that if we are making 1 lakh units, then there will be a total budget of rupees only 10 lakh, right? There will be sales target also, right? So a number of targets are set up by the organization in the form of the budgets, right? So when the budgets are prepared, they are obviously required to be compared with the actual targets which have been achieved or not. Because for example, an organization has made up a target in the beginning of the year that 1 lakh units should be produced. Then at the end of the year, whether these 1 lakh units were prepared or not, more can be prepared, less can be prepared, or equal 1 lakh units can also be prepared, right? So during that particular year, whether that target of producing the 1 lakh units of say product A was achieved or not, so decisions related to that are required to be taken up by the management. So the information for taking such kind of decisions is provided by management accounting, right? If we say ratio analysis, in the ratio analysis a number of ratios are calculated. For example, cash ratio, for example current ratio, quick ratio, that we will be discussing in the further videos. So these ratios, for example, there is a ratio which is known as a debtor turnover ratio or creditor turnover ratio. All these ratios are used by the management in the decision making related to the organization, right? So this branch of accounting helps the management in making the decisions related to the planning and controlling of the organization. Fine. The next branch of accounting is social accounting. See, these days it is a trend that companies are not solely made for profit making. They are subject to transfer, or they are subject to contribute a part of their earning for the welfare of the society, right? So there are always certain kinds of the social contributions which are made by the organizations, whether these are in the form of education awareness, or they are for the health, or there can be n number of purposes for which the social contributions are being made by the organizations, right? So when the information related to the social contributions that are being made by the companies, if that information is sought, then that information will be provided to the users by the social accounting, right? We are all aware of the term about corporate social responsibility. So under corporate social responsibility, the companies these days are making up a contribution of approximately 2% of their net profits for the welfare of the companies. They are making up toilets in the schools. They are making up they are providing midday meals to the children going up to the school. There are many health campaigns that are organized by the companies. So all the social contributions that are made by the companies, all the social awareness campaigns, and all the money which is related to the social contributions are headed up towards social accounting, right? So social accounting is involved in the cost and benefit analysis of the social contributions that are being made up by the organization, right? So from this, I think we are very much clear about what are the branches of the accounting and what all functions are further performed by these branches of the accounting, right? First one was the financial accounting, which provides the information related to the profitability and financial position. Then the cost accounting, which provides the information about the total cost and the per unit cost of the product. Management accounting helps the management in making the decisions regarding the planning and controlling of the organization. And then there is social accounting, which provides the information related to the social contributions which has been made by the organization, right? So I think that from this all we can make a complete analysis that mainly accounting is involved in maintaining a systematic record of the financial transactions which has been made in a particular year. So all the financial transactions which have been made by the organization in a particular financial year, they will find the place in the accounting, right? So accounting is involved in maintaining a systematic record of the financial transactions. Then it is involved in depicting and portraying the profitability and financial position, right? So by preparing the ledger, by preparing trial balance and financial statements, and accounting is involved in depicting and portraying, showcasing the profitability and financial position of the organization, and that total information or accounting information is communicated to the decision makers, is communicated to the users of the accounting information, so that they can make their relevant decision making, right? So I think from this we are very much clear about the accounting, its process, the various branches of accounting, and then yes, a complete description of the functions of the accounting, right? Okay, then moving ahead to what are the basic terms which are used in accounting. See, whenever we will be further heading up towards the solving of practical problems, we will come across certain terms that are being used, right? So when we will have the clarity about these terms, then only we will be able to use them particularly in the accounting formation, the formation of accounts, right? So the very first term that is used up is account, right? I think we all will be very much aware about this term account because it is a general term. It is, when we say it's a khata, we all have accounts in bank, right? Or you can still remember of going to a canteen and then saying to the owner of the canteen, then okay, enter this amount in my khata, enter this amount in my account, right? So account is a place where the individual transactions of like nature are recorded, right? See, there will be a number of transactions related to cash, there will be a number of transactions related to plant and machinery, there will be a number of transactions related to land and building, sales, purchases, sales return, the rent and salary which is paid by the organization, the wages which is paid by the organization. So there will be n number of transactions related to these. So when all these individual transactions of like nature are recorded in a particular place, that is known as account. All the for example, if I say go to a bank, then all the transactions related to me will be entered in my account only, right? If another person, say Mr. X is having an account in the bank, so all the transactions related to him only will be there in his account only. All the transactions related to Mr. Y will be there in his account only, right? So account is a place where the transactions related to a like nature are recorded, right? In accounting, a separate record of each individual expense, income, asset and liability is maintained. So as I told you, there are number of transactions related to cash, right? So all the transactions related to cash will be prepared in the cash account only, will be entered in the cash account only. Say Ram is an employee of the organization, so all the transactions related to Ram, the employee, will be entered in his account, Ram account. All the transaction will related to the salaries that are being paid by the company during a financial year will be entered in a salary account, right? Suppose that there is a customer Mr. X, so all the accounts, all the transactions which are related to Mr. X will be entered in the account of Mr. X. So remember always, an account is prepared in a T form only, right? So the account related to each and every individual, each and every expense. So if there is an income also, so suppose that a company is earning an income in the form of commission, so there will be a commission account, right? So all the all the transactions related to individual expenses, income, asset or liabilities. So for all these things, a separate account is prepared. There will be a separate account for, say, land and building is there. So a separate account for land and building will be prepared. And all the accounts are always prepared in T format, we say, right? I hope that this is clear. What is an account? So when we say that a T format account is being prepared, so account will be having two sides. One is debit, the left side, and the credit side is on the right hand side, right? So the debit and credit side of an account will always be there. In each and every account there will be debit and credit, debit and credit. This is the debit side, this is the credit side, this is the debit side, this is the credit side, right? So when the transactions are being entered in the debit side, it will be entered with the denomination 2, right? And when you will be entering the transactions on the credit side, these will be entered firstly with the denomination of by, right? I hope that it is clear. What is an account? Account is a place where the individual transactions of like nature are recorded. It will be in the T format, debit and credit side, right? Okay, so let's move ahead to the second term, which is capital. See, capital is the backbone of a firm, because without capital a firm cannot run. In order to run a business, money is required. So that money is provided to the firm by the owner, and the amount which is being invested by the owners in the firm, that is capital, right? So this is only capital which brings the company to its functioning. The amount of money which is invested by the owner in a business, from which all the goods will be purchased, right? From which all the payments to the suppliers will be made. So that money which act as the backbone of the firm, that money which is invested by the owner in the business, and that money which will bring the complete business into functioning, that amount is known as capital, right? Okay, then coming up to the next term is the asset. See, asset is we can say in Hindi, it is jama punji, right? A firm, whatever is lying in the possession of the business is asset, right? अगर हम asset की बात करें तो it can be an asset of an individual also, because if an individual is having properties in his or her name, then that will be his or her asset, right? So asset is anything which is in the possession of the business, right? That lies only in the name of the business, that lies only in the possession of the business is asset, right? See, asset can be of two forms. It can be of fixed nature, it can be of current nature. So on that basis, the assets are divided into two particular headings, that is fixed assets and current assets, right? Now let's discuss these. What is fixed assets and what are the current assets, right? Fixed assets are in the possession of the organization for a longer period of time. So if an organization says, I have a building worth rupees 20 lakh, I have machinery worth rupees 40 lakh, and I have furniture worth rupees 30 lakh, then these things are going to stay in the possession of the business for a longer duration, right? That is why these are known as the fixed assets of the business. However, the current assets are those assets which are in the liquid form and which will not stay in the possession of the company for a longer year. It will merely stay, or these can be converted into a cash within 1 year. So these are highly liquid in form. For example, if a company says that I have cash worth rupees 10 crores in my in my hand and 20 crores in my bank, right? So these two things are in the possession of the company. These are highly of cash nature, which can be converted into cash within an year. So if a organization is having a stock worth rupees 50 lakhs, right? So that stock, which is lying at the end of the year with the company, it can be converted into cash within a year, right? So these things, these assets, current assets, are converted into cash within an year, which are in the liquid form. However, the fixed assets are those which will lie in the possession of the business for a longer period, as well as I said, as like building, machinery, and so on, right? Okay. See, the current assets, not only cash in hand and cash at bank are the current assets of the organization. There are a number of other assets also. For example, prepaid expenses. See, what are prepaid expenses? Suppose that a company was required to pay a rent of rupees 24,000, right? But it paid rupees 30,000, right? So that particular amount of 6,000 which has been paid in advance, which is prepaid, is the asset of the organization, right? Because it will be giving up a benefit to the organization which has been paid extra. It has been paid in advance. It will be the asset of the year. So that is why the prepaid expenses are also the current assets of the organization. Okay. Then we have debtors. Debtors are those entities, or debtors are those persons from which the company is supposed to receive certain amount of money, right? So suppose that the company has sold certain amount of goods to a customer, but that customer has not paid the concerned amount. So he or she will be paying up that particular amount later on, right? So the company has not received the amount from the customer, so the company will be receiving the particular amount of the sold goods later on in the year. So that particular person or the customer will be known as the debtor of the company, from whom the company is entitled to receive the amount of the sold goods later in the year, right? So debtors are also the current assets of the organization, from whom the company will be receiving the amount later on, but within a year, right? So because the current assets are those from which cash can be converted up within a year. Okay. Then bills receivable. Bills receivable are also the current assets of the organization. So what are bills receivable? See, bills receivable is a negotiable instrument which is which is drawn up by for example, I have told you that there are debtors, there are the customers to whom you have sold goods on credit, right? So a bills receivable, it will be a note. There will be a note prepared right? In this note it will be written that the company XYZ company is there, it is supposed to receive this much amount of money, suppose rupees 1 lakh from Mr. Ghansham, right? So bills receivable will be that instrument, will be that instrument which will be conveying that yes, after showing this particular BR to the customer, he is supposed to the company is supposed to receive the amount and the customer is supposed to make the payment, right? So seeing that BR, the company can itself say that yes, this BR shows that I am supposed to receive this much amount of money from the customer, and seeing that BR, the customer yes realizes that yes, he has to pay a particular amount to the business. Why the word receivable is used? See, the receivable is used because the company is supposed to receive the amount, so it will be BR for the company, right? For the customer it will be bills payable because he is supposed to pay. So for the company it is bills receivable because the company is supposed to receive the amount from the customer. So this BR also is the asset of the organization, current asset of the organization, because showing that BR to the customer, it will be receiving the amount of the sold goods to from the customer, right? So these are all the current assets of the organization. Assets are divided up into the two heads, fixed assets and current assets. Fixed assets remain in the possession of the business for the longer period, and the current assets are convertible into cash within a year, right? Okay, now coming up with the next head, that is the next term, which is liability, right? See, liability is the amount which the company is supposed to pay to the outsiders, which is amount which is owned by the firm to the outsiders. A firm may have taken, a business may have taken a loan from the bank or overdraft from the bank, right? So these loan and amount of the overdraft will be a pressure on the organization that yes, it is supposed to pay that amount to the outsider, to the bank, right? So the amount which is owned by the firm, which is owed by the firm to the outsiders, loan or the amount of the overdraft, then that is known as the liability of the firm, that yes, the firm owes this amount to the outsiders. There are another form of liabilities as well. For example, outstanding expenses. Outstanding expenses are those which the firm was supposed to pay but it has not paid. Suppose a firm was supposed to pay wages worth rupees 20,000 to the employees, but it has not paid it, right? So this is outstanding. It is still required to, the firm is still required to pay that amount of wages to the employees. 20,000 has not been paid by the firm, right? So that 20,000 is lying outstanding. That is why it is stated as outstanding expense. So that outstanding wages or outstanding salaries or any kind of expense which has not been paid by the firm, but it is required to pay in the near future, right? It is the amount which is owed by the firm. That is why it will be the liability of the firm, right? Then there are creditors. Creditors are those entities, and creditors are those persons from whom the business has purchased something but it has not paid the amount. Suppose that the firm has purchased raw material from a person, Mr. X, but the amount of that raw material purchase has not been paid by the firm to the supplier, right? So that supplier will be the creditor for the organization because the customer has not because the firm has not paid the amount to that person. So that person will be the creditor for the firm. The amount need to be is required to be paid to him, right? Then bills payable. See, as I told you earlier as well in the discussion of the current assets, bills payable, it is also a negotiable instrument which shows that a particular amount which is mentioned in the bills payable is required to be paid by the firm. So it will be written that yes, the company is required to pay this much amount of money to this particular person, right? So it's a negotiable instrument, right? It is actually in the written form. There is a paper on which everything is written that this much amount of money is owned by this entity to this entity, right? So bills payable, it act as a liability for the firm because on this bills payable it is written that yes, the firm is supposed to pay the amount to the concerned person, right? So this bills payable will also be the liability for the organization, right? So liability is the amount which is owed by the firm to the outsiders, whether it is in the form of loans or overdraft taken from the bank, or the expenses which has not been paid, which are lying due, which are required to be paid by the firm in the coming up year. Creditors from whom the material or something has been purchased but amount has not been paid. And again the bills payable, which shows that yes, the firm owes certain amount of money to an entity. Okay, so till now we have discussed about the assets and the liabilities. Assets are the things which are in the possession of the business, and the liabilities are the amount which are owed by the firm to the outsiders. So if we make a difference of the assets and liabilities, then we will be having with us is capital. So capital is the difference of the assets and liabilities. Asset is what we are having and what we are supposed to pay. So when the amount which we are supposed to pay will be deducted from what we are having is, then the amount we will be having is capital. So for example, we say that a company is having assets worth rupees 2 crores, right? But there is a liability lying on the head of the company, so for suppose rupees 1 crore, right? So the capital of the company will be 1 crore. Right? So when we make the difference of the assets and liabilities of the organization, what we will be getting up with us is the amount of capital. Okay, I hope it is clear. Okay, the another terms which are used frequently are revenue and income. See, there is a huge difference between these two terms, but these two terms are generally used interchangeably by the people. See, revenue is when certain amount of goods are sold by the firm. Suppose a sale of the company is rupees 10 lakhs, right? So this amount which has been generated from the sale of the goods will be the revenue. But certain expenses would have been made by the company in generating this amount of sale. So when we deduct that amount from the amount of the sale, what we get is the income. So in generating the amount of 10 lakh of this sale, we made expenses of suppose rupees 6 lakh, right? So what we are left up with is 4 lakh. So the 4 lakh will be the income, while 10 lakh was the revenue. So revenue is the amount which is generated from the sale of the goods. However, the income is the amount which is founded up after deducting the expenses which were involved in making the sold goods, right? So 10 lakh worth goods were sold, but in order for manufacturing of those goods, 6 lakh was incurred by the company. So 4 lakh will be the income of the organization, right? Okay, the next term which is also used up frequently is deferred revenue expenditure, right? That what are the deferred revenue expenditure? But before discussing like what is deferred revenue expenditure, we must be aware about like what is expenditure, right? As the name itself suggests, what are the expenditure? Expenditure are the amount which is incurred by the company, the amount which has been expended by the company in a particular financial year. But that expenditure could be of two natures, that can be of capital nature or that can be of revenue nature, that particular amount of expenditure, right? So when that expenditure is being incurred for the benefit which will be there for more than 1 year, then that will be a capital expenditure. However, the expenditure which has been made will be generating the benefit for the business during a particular financial year, during 1 year, then that will be a revenue expenditure. For example, if I say that a certain amount of I think there has been a mistake, right? Okay, so if a certain amount has been paid for the acquisition of the fixed assets, right? A company has purchased certain fixed asset, for example plant and building, or it has purchased land and machinery, right? Or if it has purchased furniture, right? If it has purchased or it has made a construction on certain land, right, then that will be a capital expenditure, because the amount incurred on these will generate the benefit for the organization for more than 1 year, right? However, benefit for the organization for particularly 1 year. So for example, if the firm is paying up of expenses like stationery or rent, or these can be wages, right, there can be marketing cost, right, there can be office and administrative cost, or there can be a cost related to the raw material which has been purchased. So all these costs are going to deprive benefit for the organization for 1 year only, right? And the rent and the wages paid, the marketing cost, these all will be related to a particular financial year. These all expenses will be generating income for the organization, benefit for the organization for only 1 year, right? So that is why we say these expenses are the revenue expenses. However, the capital expenses are those which will be generating the benefit for the organization for more than 1 year, right? So these are this is a classification of expenses which are done by the company. Either there will be capital expenses or there will be revenue expenses, right? Now coming up to the term is deferred revenue expenditure, right? See, deferred revenue expenditure are although revenue in nature, but the benefit of these are supposed to be deprived over a number of years, right? For example, there is an amount of rupees 10 lakhs which has been spent up by an organization in advertisement, right? But that advertisement will not be shown only for 1 year on the TVs, right, or the radios. It will not be there in the advertisement for only 1 year. It will be there for many years, right? So although that amount of rupees 10 lakh has been paid in a particular year, but the benefit of that particular expense which has been made on the advertisement will be deprived for more than 1 year, because that particular advertisement will be generating up, the customers will be generating up the revenue for the company for more than 1 year, say for 5 years or for 7 years, right? So the deferred revenue expenditures are those which are revenue in nature, but the benefit of these are enjoyed by the firms for more than 1 year. Similarly, there can be certain prepaid expenses as well. Suppose that the company was required to pay the insurance premium of rupees 30,000, right? But it paid rupees 60,000 or 70,000, right? So that amount which has been paid extra, that expenditure which has been made, will be generating the revenue, which will be generating the benefit for the organization for the next year, for the coming up years, right? So this prepaid insurance, although it is of revenue nature, but the benefit will be generated, the benefit will be received by the organization for the number of years, right? So deferred revenue expenditure, although these are of the revenue nature, but the benefits of these expenditures are enjoyed by the firms for a number of other years as well, right? So a number of other terms which will also come across are drawings. See, drawing is certain amount of money or certain amount of it can be certain amount of goods as well, which is used by the owner, right? It is not being used for the welfare of the firm. It is not being used for the purpose of the firm, but it is being used by the owner himself, right? So suppose that the owner of the firm has withdrawn certain amount of money from the bank, or he or she has withdrawn certain amount of the money from the firm for his personal use, maybe for purchasing a house, for purchasing his personal car, right, or for purchasing certain kind of gifts for his children, right? So that particular amount which has been drawn by the owner for his own use, for his personal use, this is known as drawings, right? So the amount or even the goods which has been withdrawn by the owner for his personal use is known as drawings, right? The other term that you will be coming across is like stock or inventory. Stock is the goods which are lying up with the organization, stock for the production. So stock can be in the form of the raw material, you can say, right? The raw material which is lying up with the organization, right? There will be stock in the beginning of the year. There will be a stock of raw material. Firstly, that will be used by the firm. Then that stock will be used for making up the finished product. Will be that raw material will be used for making the final product. So there will be a stock of work in progress, right? And then when the final product will be made from this raw material, so there will be a stock of finished goods, right? So stock is also known as inventory. These are those goods which are lying up with the company, which are lying up with the organization at the end of particular accounting period, right? So that stock can be of raw material which was purchased, which can be in the form of the unfinished goods, which are also known as the work in progress, and that stock can also be of the finished goods which have not been sold by the firm, right? So stock will be the value of the goods which are lying up with the company at the end of the particular financial year, right? Then these two terms are also there that which are frequently used up in the accounting. These are profit and gain. See, there is a difference between these two terms. Profit is the amount which is generated by the firm after reducing all the expenses from the income. So if a firm reduces all the amount of the expenses from its income, then what is generated is profit. This is not gain, this is the profit. When the total of the revenues and the total of the expenses are deducted up, the excess amount is known as the profit, right? This is the profit. However, gain is something which is derived from the incidents which are incidental to the organization. For example, if the organization has sold its land, or it has sold its plant and machinery, the worth was 10 lakh, but the market value came out to be 12 lakh, right? So this is the excess of the value of the fixed asset will be the gain for the organization, because this gain was incidental to the organization, which was not of the regular use for the organization, right? So the profit is generated from the excess of the revenue and the expenses of the organization. However, the gain is derived from certain events which are incidental to the organization. For example, I told you from the sale of the fixed asset, or maybe the firm has won a lottery, or their court case has been won by the organization. Then such kind of incidents, these are incidental for the organization. Then the benefit which is derived from these incidental cases is gain. However, the benefit, the excess amount of the revenue and the expenses is profit, right? So there is a difference between these two terms, which is profit and gain. Okay, the other term that we are going to discuss is voucher. See, voucher, we can say it is a particular kind of a document, right? Voucher is a document. Voucher provide authentication or authorization to pay on the basis of these business transactions. For example, when you visit a bank, any bank, whether it is HDFC Bank or ICICI, enter the transactions, enter your amount, enter your name in the voucher, right? So voucher differs from every firm. Every firm prints their own voucher, but these voucher act as a document. These act as authorization on the basis of which the entries are made by the accountants in their books of account. Each transaction is supported by a separate voucher. So if 10 customers are entering up the bank, those 10 customers will be entering their own vouchers, right? So on the basis of those vouchers, the entries are made by the accountants of the firm, right? So vouchers are the documents. Vouchers are those documents which provide the authorization to pay on the for the business transactions, and these are recorded up by the accountants in their books of the accounts, right? So I hope that all the terminology related to the accounting is clear to you. It was like assets, liabilities, capital, revenue, deferred revenue, expenditure, the types of expenditure, drawings, stock, profit and gain, voucher, right? So all these terms are frequently used up in the accounting, and whenever you will be solving up the practical problems, you will come across these terms, right? So thank you for watching. I hope that you like the video, so you will like and share the video. Thank you so much.